So wonderful evening, friends. Hope all of you are doing fine, and revisions are going on in full swing. Happy Ganesh Chaturthi wishes to everyone. A lot of candidates have been a bit nervous regarding what exactly you need to do. See in AFM theory, how can I recall everything on the exam day morning? So to sort out all these things, this video is going to be very handy for you. So do check it out. Do make use of it. So, what are the basic questions that corporate level strategy should be able to answer? Suitability, feasibility, and acceptability. Suitability is whether strategy will work for the accomplished objective, and in case of acceptability, it is concerned with the stakeholder satisfaction. It can be financial as well as non-financial. And feasibility is it determines the kind and number of resources required. So this is the basic level of basic questions that corporate level strategy should be able to answer. Lot of chances for your MCQ as well as 4 mark question as well. And what are the major components of financial planning is financial resources, financial tools, and financial goals. So next question is, what makes an organization financially sustainable? Good public image, have financial autonomy, and have the more than two things. You should have more than one source of income and one way of generating income. And what makes an organization sustainable? You should be able to distinguish both these questions. First is, what makes an organization financially? What makes an organization financially sustainable? Now, what makes an organization sustainable? Clear strategic direction, adequate administrative financial infrastructure, and it should be able to attract, retain, and manage competent staff. So next one is, we're going to see an important question from securitization with very easy shortcut. So what is the problems in securitization? The shortcut is salty. I repeat, salt is problematic. So S for stamp duty, A for accounting, L for lack of standardization, and T for tax duty, and I for inadequate documentation. So this is the problems for the securitization. So moving on to the next, elaborate the business succession strategy. So what is the steps for business succession strategy? So evaluate key leadership positions. What are the various positions that needs to be filled? Who are in their mid 50s or who are likely to resign? All those things should be checked. Map competencies required for the above positions and identifying the competency of the current workforce and bridge leader. So this is the business succession strategy. And in context of startups, what are the challenges faced in implementing the succession planning? So founder mindset is different from the corporate mindset and premature for startup to implement business succession because they are in their early stages. So their focus will be only primarily on their growth and not on the significant long-term impact. And founders are the face of startups, so they would not like to change that. And what are the reasons why India became a sustainable environment for startup? Another very important question which was asked in May 24 as well, because of the pool of talent, cost-effective workforce, and increasing internet use of technology and variety of funding options. So these are the various reasons why India became a sustainable environment for the startups. So moving on to the ninth question, what are the characteristics of venture capital funding? The shortcut is HEL. So HEL, that is, if you don't get funds, then you have to go to L as a business person. So H for high risk, E for equity participation, L for long-term horizon, and N for lack of liquidity. So moving on to the next categories, this is not so important because this was asked in May 25, but still frequently asked questions. I'm going to help you run through it because in case if you're giving your exams in Jan 26 or next year, it will be very handy for you. So what are the categories? Seed money, startup, first stage, second stage, third stage. The years are 7 to 10, 5 to 9, 3 to 7, 3 to 5, 1 to 3. The risk in case of seed money is extreme and startup is very high, then other categories are very high, and third stage is medium risk. So moving on to the next. So next one is CDO, very important, the centralized data obligation. So what are the types of synthetic CDO? Is unfunded, fully and partially funded. What are the type of risk involved? Is default risk, reinvestment risk, liquidity risk, and prepayment risk, or the various risk involved in CDO. So explain the difference between the financial and real options. So what are the shortcuts? What are the 4 side headings? So you should remember is payoffs, approach, underlying, and exercise period. These are the difference between financial and real options. So moving on to the securitization topic, we saw new one question. So what are the pricing in securitization? So it's from originator angle, from investor angle. Originator is the incurring the outflow, that is the based on which pricing should be fixed. And in case of investor, the discounting best estimated expected future cash flow is the pricing in case of securitization. What are the features of securitization? Bundling and unbundling, trenching, homogeneity, risk management tool, and creation of financial instruments. These are the features of securitization. So what are the benefits? Pricing, we saw originated investment angle. Same, you're going to see benefits originated investment angle. So in case of originator, it is off balance sheet funding and more specialization in terms of buying business and reduce borrowing costs. And in case of investors angle, and also an originator, one more point is that is it helps to improve financial ratios. And in case of the investors, the risk diversification and the regulatory requirement and protection against default. These are benefits of securitization. So moving on to the next question, what are the application of blockchain? So blockchain application is government, travel industry, healthcare, financial services. These are various applications of blockchain. This is also covered in your securitization chapter. So moving on to the next, what are the risk in blockchain is the tampering of the underlying technology. Information overall will be there, and there is currently no central authority to administer. And also the conflict, that is when monitoring controls are designed, so the level of control, password control, etc. varies. For example, top management, high level of security is required, whereas middle level, same level is not required. So this kind of investment bifurcation, everything will be very exhaustive and time consuming. So these are the risks involved in blockchain. And moving on next, which is frequently asked, it was asked in your May 25 as well. What is the difference between similarities between the tokenization and securitization? So trading, that is, it helps to generate wealth and liquidity and diversification and new opportunities. So these are the different similarities between tokenization and securitization. And moving on to our last, that is a risk management topic. So what are the parameters of currency risk? Natural calamities, government action, government change, inflation rate risk, nominal interest rate. For example, the Trump's enforcing 50% tariff, etc. All those will be able to relate practically with the current scenario. Now, what are the techniques involved to manage counterparty risk? Carry the due diligence and know the exposure limit, use performance guarantee, and do not commit to a single party. So these are the techniques to manage the counterparty risk. What are the techniques to counter political risk? Local financing, proper negotiation, and buying raw materials locally. So these are the various techniques to counter the political risk. Within 7 minutes, we are able to focus and cover all the important frequently tested theory in your SFM. I'm sure it's going to be very handy for you. So do check it out. Do subscribe with your friends. Unfortunately, the previous channel, which had nearly 10,000 subscribers, some issues, so that has to be stopped. So share with these friends, and we're going to see a few more things. This is the theory aspect. Now we're going to see the formulas. I'm sure it's going to be handy for you as well before we wrap things up. So here from last minute reference and the mergers, the maximum exchange ratio a buying company can offer. This is the various varieties of questions you can get in your exam. The swap ratio, that is EPS or book value and market price into the percentage given. If you multiply, you get the swap ratio, and the gain or loss for the shareholders of two independent entities, and also decomposing the share price into EPS and PE. So ROE can be computed by as follows, that is earnings after tax by equity shareholders funds into, and retention ratio is nothing but 1 minus the dividend payout ratio. True cost of merger, very frequently asked. Number of shares to be received by buying company plus number of shares to be given, and the value can be arrived as market price of the share in the number of shares plus synergy value. So true cost of merger will be the value that you arrived in step 1 into the percentage you arrived, so that will give you the true cost of merger. Then bank merger question, the key thing you should keep in mind is CR by CRW. That is capital adequacy risk, so that can be computed by total capital by risk weighted assets. And how to compute equivalent EPS of selling company is the swap ratio or number of shares offered by EPS of the buying company. So lastly, a couple of important things is free float market capitalization, that is total number of shares minus promoters holding will give you the free float market capitalization. And how to compute the correlation coefficient in a portfolio is you do by covariance of the stocks and market written by variance of the market, you will get the correlation coefficient. And beta can be computed as sigma xy, where x is the stock, y is the market, minus n sigma xy by sigma x square minus n into sigma the y square. And systematic risk equal to variance into the beta square into variance of the market index. Hope all of you followed with me, and I'm sure it's going to be very handy for you, especially for AFM, especially the day before the exams, who go through this 10 times, at least 3 to 4 times. So all the reviews, keep going. Best wishes.